Hi, my name is Brianna Reeves, and for the market failure, I'm going to talk about the housing market failure. So in the late 90s, early 2000s, lenders would had very lax qualification standards for housing loans. They would gather minimal information based on what you read on the application was how they determined your loan approval. This was, pretty fine because the cost of a house was extremely low. Um, but what happened is the housing market grew at an increasing rate to where eventually the lenders were still giving out loans with low qualifications, but to get approval for these high priced homes, they were giving out not just one loan, not just two, but three and four loans. So that way the um, homeowner could get approved for the house that they want to buy. Now, this was all well and good until the individual actually couldn't afford their home because they have four loans on one home. Plus, what they had was instead of an interest rate that didn't fluctuate, it was a flat interest rate. They had interest rates that would fluctuate. So after the third year of owning your home, your interest rate, tripled, quadrupled, which made your house payment go triple and quadruple as well. And when you have four mortgage loans, people were defaulting and they couldn't afford their home. So what happened when homeowners couldn't afford their homes? They would default, they would go into foreclosure, or they were bank owned. And at first, it was fine. The lenders, banks they were losing homes, they would just resell it. But then it became such a high percentage of homeowners lost their homes, the banks needed to do something as um, the equity in homes they were upside down by double the cost of the home. The government actually intervened and were giving funding to the banks, which the banks would allow the homeowners to um, basically refinance their home at the cost of what it is at that time. So instead of them, owning a $400,000 home where their neighbor just sold it for 142,000, they were actually redoing their loans to cut them a break. So some individuals, if they qualified, were actually able to stay in their home at the lower rate. And then now the housing market is slowly going up. But I can tell you that the qualifications, the standards, what banks need to qualify for you a loan is a lot more strict than what it was 10, 15 years ago, where if you wrote you made $250,000 on an application, you didn't really have to prove it. It was simply they would take your word, hand you a loan, and hope for the best. I know now, even getting into apartments, I do work in the apartment industry. We look at everything credit, income. We have to have proof of income because I know personally if they falsify documents with their proof of incomes, I would say about 8 times out of 10, they end up getting evicted because if they had to falsify their proof of income, they're not going to be able to pay their um, the rent on the apartment, which is ultimately what happened when the housing market grew so fast and people couldn't afford their homes because they weren't really qualified in the beginning. Thank you so much. This is the market failure that I chose was the housing market.